it's now becoming a reality. And when you see the World Gold Council, who's supposed to be a gold advocate, come out and say that this is going to blow up the whole system, I say good riddance to the system. The system is the problem. When you see inflation in commodities the way that we are seeing right now across the board in just about every commodity, from canola oil to lumber and everything in between, there is absolutely zero reason that gold and silver should not be much, much, much higher basis the inflation that we see in the system right now in commodities. In fact, gold and silver are the barometer for the inflation, and you wonder why they've been holding it back. For a very long time, the big money has been holding back the price in gold and silver for a reason. And in my mind, the reason is twofold. One, it's to accumulate it, and two, it's to keep people from really seeing the reality of what's happening. Yes, they see that the prices are up in lumber and in beef and in oil and all these other things, and there's always a reason behind it. It was the COVID, it was the ship in the Suez Canal, blah, blah, blah. The truth of it is that the dollar's being eviscerated right out from underneath us. They are printing it away to worthlessness. And gold and silver are the barometers by which we would normally measure that. They're holding it back, and they're using these held back prices to eradicate themselves really from these unallocated levered positions, which now have to change, where you have to be 85% collateral to position. And that's a far reach from where they are right now. And they have a very short amount of time to get there. You have commercial banks that are scrambling, I believe, to get out of these unallocated large short positions. I think that's going to have a lot to do with volatility. You're going to see a lot of volatility over the next few months as they use any opportunity, whether it be in rhetoric or in timing, a la dumping 35,000 contracts right after London closed before New York opened the other day. You're going to see volatility to the downside. But these downside volatile moments, I believe, will be bought very quickly. Just don't get knocked off the tree would be my advice right now over the next few months, as these big banks are really trying quickly, I think, to get out of these unallocated positions, whereby they will be in big trouble if they don't get to a 85% equity to position limit. And the London Metals Exchange is a unallocated 100-to-1 leveraged program, and that's not going to work under the new Basel III conditions. So they have just a very few couple of months, a very short period of time rather, to get in line. And with that, you're going to see, I think, some downside pressure. They need to sell to get out and to cash settle. But ultimately, this will be very bullish for the price of gold and silver. Ultimately, what it means is that the banks are not going to be able to push the price around the way that they used to, is the way that I take it. So I think that to me is first and foremost. I would use these corrections, these beat downs will be short and they'll be violent perhaps, but I would use them as an opportunity to increase your position, because by fall, it's a whole different ballgame. If the banks do not have the ability to be massively leveraged in these short positions, the whole game is rewritten. So that to me is point number one for sure. And in order to do it, they're going to have to knock the price down to cover. Well, they'll do that in thinly traded sessions, like as New York is opening right after London is closing in the access market, or in the middle of the night, 2:30 in the morning at the AM fix. It's the same playbook that they've used for a very, very long time, only the playbook is ending. The game is ending. It's the fourth quarter with the 2-minute warning, and they have to do all that they can, really, I think, to get to this point. If I had to guess, I would say, by the end of this year, things are vastly different in the precious metals market, simply because the banks won't be able to use the leverage that they do to create a perception of reality. It will have to be more of a cash and carry type of an environment, not one where it's levered at 100-to-1. And that's very, very, very bullish, ultimately, for the price of metal. And when you throw in massive inflation, and when you throw in the Belt, Road, and Rail Initiative, where 70% of the world's population is being indoctrinated into the new Chinese digital yuan. Put all of these things together. I don't think you could ask for a more bullish atmosphere than what we see right now. And one of the things that you have to do, as we talked about earlier, you have to have strong fingertips. Got to hang on. You have to trust your gut. It's been a very long road. And you hear people saying this over and over and over again, myself included. I've often felt like the little boy who cries wolf, but I always say, remember, at the end of the story, the wolf comes. When you base your conclusions upon logic, economics, mathematics, it comes true. And now, for the very first time ever, the Basel III agreement is going to make the wolf come. Has to. They cannot hold back the price when they're doing it without massive leverage. This new ratio of equity to debt will change that dramatically. And then we look at the environment with getting physical supply. You know, we've talked about how the U.S. Mint, I said, would close for several weeks and got a lot of heat about that online. Well, maybe they didn't publicly admit to closing, but I can tell you they haven't made a thing. Allocations are next to nothing, and it's been that way for several weeks. I don't know if they're going to make any more of the 2021 Silver Eagles. Sure feels like they're not. It will go to the Type 2 2021 Silver Eagle. A lot of people are wondering about that, too. Are they putting a microchip in it? They've been very tight-lipped about it. The Royal Canadian Mint uses micro engraving, which is a little tiny maple leaf about the size of the tip of a pencil that it costs millions and millions of dollars to buy a machine like that. They use that for their anti-counterfeiting feature. I'll tell you this, if they really do put a chip in the new gold and silver eagles, I don't think anyone will buy it. But they've been very tight-lipped about what that security feature is. So as far as I know, they come out in July. And if you told me that we're not going to see anything out of the U.S. Mint until July, I'd believe it. That's how slow it's been coming out of there. Bottom line to me is I see volatility that ultimately leads to rising prices, volatility that should be looked at as a subsidy and a gift, because I don't think you'll see this kind of volatility once the leverage is pulled out of the system. And we're seeing difficulty getting product. And the more it becomes recognized that inflation is coming, the more that people pull out of equities and cryptocurrencies with profits, knowing that President Biden wants to raise the capital gains rate north of 40%, then you're going to see some real inflation. Then you're going to see real difficulty getting product. I think we're on the cusp of it. And, I normally don't like to go out on a limb and say these kinds of things, but it's something that I've been believing for a very long time, and I think it's gonna come closer or sooner than people think. And quite frankly, it's got me a little bit concerned at this point.